Okay, good morning, good afternoon, good evening, wherever you are in the world. Welcome to Tech Growth UK presentation, part of London Tech Week 2021. My name is Amy Davies and I'm Head of Technology for the Department for International Trade's Investment Services team. It's an absolute pleasure to be here today to open up this session, which will give you a great insight into why you should bring your business to the UK and how to do it. So if you're looking for a great country to expand your business, develop and launch new products and services, and sell them internationally, you've come to the right place today. Today's 2-hour session will begin with myself giving you an overview of the UK's abundance of exciting market opportunities and the government support offering that enables you to get set up in the UK and leverage all of those opportunities for your business. After me, we'll hear from 3 of our commercial partners, Joanna Dodd of Rochester PR Group, who'll be talking about how to raise your profile in the UK. James Blakemore of the JMB Partnership, who'll talk you through his top tips for selling in the UK. And finally, Lloyd from Burges Salmon, who'll be talking you through how to set up a UK entity. Following on from them, we'll have a talk from Justin McRae, Chief Operations Officer of Fortunis Capital, who'll be talking you through what a venture capital fund looks for. Up next will be Chris Moore, one of our tech sector specialists, who will be talking to 4 companies who've already been supported by my team to get set up and launch in the UK. And for the final part of our session, we'll head back to Justin, where he'll be facilitating a panel discussion with 3 other VC fund managers who'll be answering some pertinent questions about their funds and how to access them. So before we get started, a little bit of housekeeping. You can ask questions by clicking the Q&A button located on your Zoom toolbar, and you can show your support for other people's questions by giving them the thumbs up. If you're experiencing any technical issues, can you please contact our moderator using the chat moderator, the chat box also on the toolbar at the bottom. Okay, so we're keen to talk a little bit about our audience today, and to do that, we're going to pop up a poll. We'd like to know what country you're dialing in from, what type of tech company you have, and what stage of entering the UK market you are right now. You should be able to see the poll on your screen. If you could participate now, that'd be great. Fantastic. Hopefully that's given everybody long enough to answer. So let's get to the important stuff. I'm going to share my screen. Can everybody see that? Fantastic. So, why the UK? Well, the UK has the 5th largest economy in the world and a huge addressable market of early adopters. And due to an increase in demand for digital services to power working from home due to COVID-related lockdowns, the market's seen a huge surge in demand for technologies that enable, secure, and facilitate working from home. And this has significantly increased the value of our digital economy and accelerated the adoption of emerging digital technologies. When comparing the UK to other EU destinations, the UK saw $15 billion worth of venture capital funds invested in businesses trading in the UK in 2020. That's more than France and Germany combined. And in fact, a new report launched yesterday by Tech Nation, looking at the first half of 2021, we'd already increased investment in tech businesses up to $18 billion, which is just fantastic. We also have the highest number of tech unicorns anywhere in Europe, along with exceptional talent and an exceptional talent pipeline. So why is the UK the destination for choice for so many international tech businesses? Well, we've got a really well-established ecosystem that offers an array of support services that support our tech community to operate, thrive, and develop in the UK. Since leaving the EU, we've got a trade cooperation deal with the 27 EU member states and 68 free trade agreements with more in negotiation, making the UK a great place to trade internationally from. Looking at the tech scene in a bit more detail, I thought I'd use artificial intelligence as an example because it's ubiquitous throughout the technology landscape today. And you can see from the slides that the ecosystem is already supporting 1,300 AI businesses, and that by 2035, those businesses, along with businesses like yours, will add 654 billion to the UK economy, which is a huge opportunity for any tech business. To accommodate this, the government has committed a huge sum of money through the AI sector deal, and the deal centres on five foundations of ideas, people, infrastructure, business, environment, and places to enhance productivity and ensure the flourishing of AI businesses at their crucial embryonic stage. So, how can the UK government help you to bring your business to the UK? Well, once you've made an inquiry through your local DIT office, which is located at your British embassy or consulate, you'll be allocated a dedicated account manager from my team, who work really, really closely with a colleague in the embassy to understand your business requirements and aspirations. They'll offer hands-on support throughout the whole process, give you lots of different information to help you make the right decisions about where to locate your business in the UK, and facilitate connections to the right people to get you set up here. But it doesn't end there. We've got colleagues and commercial partners throughout the UK that will always be on hand, no matter what stage of your business. And we also have a large team of international trade advisors who will help you to export your products and services around the world when you're ready. So let's drill that down to a little bit more detail for you. So the UK has a wide variety of funding routes, including angel and VC investment networks, grants and debt funding, which we can signpost you to. We also have a wider ecosystem that supports businesses of any size in every technology subsector to enable and enhance your UK growth. We can also help you to find and meet with potential customers via our array of trade shows and associations. And we can also introduce you to commercial partners via our investment support directory that can assist with crucial business activities like lead generation and business development. A great example of which is James Blakemore from JMB Group, who will be talking to you on this topic shortly. We also have a great selection of accelerator programs in London and across all of UK regions. They are well established and offer hands-on support to get your businesses to the next level. We have some that are backed by corporates, and some of them offer grant funding too. So once you're ready to go in the UK, we can help you to leverage relationships with talents and skill services, universities and colleges to help you find the right talent for your business right now, but also to help you develop a talent pipeline for the future. There's been a significant increase in courses throughout the UK to make sure that we're developing that skills pool and make sure we've got a strong talent pool for the future of tech in the UK. Beyond that, we can provide you with information about programs, collaborations and funding to inspire, support and deliver your R&D ambitions. And we have some amazing tax incentives for businesses that develop and manufacture products in the UK. If you haven't considered your next R&D steps, don't worry, we're frequently releasing challenges to the market to help us drive the UK economy to become the best digitally enabled and green ecosystem in the world. So a short and sweet overview, but I hope that's given you a really good insight into why the UK and how we support you to land here. Thank you very much for your time. And without further ado, I will hand over to our commercial partners, Joanna Dodd, James Blakemore and Alex Lloyd. Thank you very much.
Thanks, Amy. Thanks very much. So good morning, everybody. Well, good morning here in the UK, and great to have you all with us today. Amy's just shared some really compelling reasons why the UK is a great place to land and grow your tech business. And my very short talk is going to really be about convincing you that one of your key jobs is to promote, publicize, and market your company to let people know you are here. And why is that? Well, because in our experience, the brands and companies that are well connected, networked with the right people, those who establish and then manage their reputations, who share interesting content and engage with their customers or consumers, depending on the type of tech, give themselves a much, much better chance of being successful in the short term. And short-term success, whether that's gaining traction in sales or generating partnerships, really helps your business with a chance of being successful in the longer term. So why can I tell you this? Well, this is because it's the type of work that my company does. It's all geared around UK market entry, launching companies in the UK, and that's all that we do. We work across a wide spread of industry sectors, but key specialization is tech. And we work across tech companies, both B2C, B2B, in many different vertical sectors. Our clients come from all over the world, so we have a unique and privileged position of seeing companies from around the world when they land in the UK. And the sort of work we do is incredibly varied. It can be creating the networks that lead to sales. It can be producing collateral for clients, running media relations campaigns, targeting influencers and opinion formers, social media programs, to name just a few. So why do you need a profile to be successful in the UK? It's tempting to think that after deciding on the UK market and all the work that entails months, sometimes years, then sorting out, you've got to sort out your visas, offices, people, bank accounts, you're all sorted and ready to go. And often, to be honest, marketing your company is well down your list of priorities. But it really shouldn't be. It's pretty essential that you get yourself known and understood so that people know why they want to buy from you. You need to manage your company and brand's reputation. Otherwise, you're just another company with your fingers crossed, hoping to be discovered. And that is going to be very challenging in the UK market. The UK is a fantastic, but it's also a competitive market. And one of the key things that founders tell us is that it always took longer than they were expecting to get those first customers or generate those first sales. And that some of their competitors who really don't have such a great solution seem to be doing better. And yes, to be honest, that means they are investing their time and money in their marketing activity to get those messages across to help their sales or their sales teams. So let me give you a quick few thoughts on how you should approach your launch in the UK. Firstly, really make sure you understand the opportunity for your company. Get to know your market here, because each market has a rhythm of its own. Do you know it? What are the key dates and times of the year, the key opinion formers, the key events? In more detail, get to know your competition and the vertical sector or sectors you could be targeting. You know, is it busy? Lots going on? Are there lots of other companies or brands competing for attention? And how are they positioning themselves and what are they doing? Is it a case that you need to be seen in the same places as them, or could you stand out by doing something very different? And then next, work out why the UK market is going to want to hear from you. How are you relevant? And who is going to be most interested in your brand or service? What problem do you solve? And do you have something genuinely new to say or offer? So rather than repeat what you know you do, look at what the market needs and make sure it is really clear how you fit in. So sometimes, for example, that can mean targeting a smaller, easier sector to begin with to give you UK credibility, rather than targeting a huge sector where you could find it is going to eat up your time and money. Then take a good, long, hard look at your collateral. Review what sort of content you used and what works in your home territory. Research, white papers, collaborations, opinion pieces, and ask yourself whether any of this content could work for the UK. Get a UK native's opinion on your website, for example. Will its style and use of language resonate with the UK audience? And then consider all the different media options you've got for sharing the content. So we work across paid, owned, earned, and shared. So paid is anything you pay for. Owned is the content you have, the collateral I just mentioned. Earned is where PR really is, where you get your influence engagement or a journalist writing about your company. And shared is very much where social media, for example, sits. So what to do next? Perhaps obvious from what I've said earlier, but the starting point is to do something. You don't want to achieve the status of being best kept secret. People need to know you. And obviously what you do is going to be determined by how much resource you can throw at it in terms of time and money. But whatever that is, do something. activate a plan, set some objectives so you can decide whether your activity has been successful. And then choose the right combination of PR, marketing, activity, the elements that will give you the greatest return and greatest chance of being successful in the UK in the short term. Don't stubbornly stick to what works at home if others, customers, consumers, local professionals, are telling you to think differently in the UK. If you trust them, trust their advice. And some other quick points: don't overstretch yourself, don't overpromise, be authentic, honest, and transparent. If you're not the leading Y or the most innovative X, don't say you are. People will always remember if you've overclaimed. And then finally, I'd say be adaptable. Almost all our clients find they change their approach and plans as they take on board learnings from the UK. So thank you for listening. Hope I've given you some food for thought about why you should build a profile for your brand and your company as quickly as possible in the UK. And I'm going to hand over to James Blakemore to talk about sales and lead generation.
Thanks, Joanna. Great to see so many companies interested in the UK market here today. I'm going to talk a little bit about some tips for selling in the UK market. First of all, just to give a bit of context as to why we're able to give that advice. I set up a business 15 years ago, working with international businesses, helping them to sell into the UK market. We work with over 1,000 international companies in that time, all about finding first customers and seeing opportunities in the UK. As Joanna said, the UK is a great market, but also very competitive. There are some things there that can help you at an early stage, but also when you're more established here in the UK. So the 5 tips I'm going to run through are just some guides really as to some of the things you can do. Obviously, the most important thing is research. So when first looking at the UK market, understanding who are your competitors, what are the risks to your business, how you're going to stand out, how are you really going to establish a market presence here in the UK. So things like SWOT analysis, understanding where those opportunities might be is going to be really important. So do your research and understand where your opportunities are. Next is data. So with any lead gen or marketing campaign, understanding who your clients and your audience is going to be incredibly important. So really take some time, understand who your existing clients are in your existing markets, understand are they large companies, are they small companies, are they growing companies, these types of things that can be really important. Obviously sectors that you're working in, the sort of buying personas of your decision makers you're looking to reach out to is incredibly important. And there's some great tools that enable you to get very accurate, consistent data that will speed the process up. I think one of the misconceptions when companies look at the UK market is actually let's get a database of 5,000 companies and send emails to them and start that approach, which is one way of doing it. But what we found over the years is that having a really targeted database, even if it's just 300 to 400 contacts, in some cases we have clients who have a very small potential client base, and it may be 50 records. That the benefit of a slightly smaller data set is that you can be more personalized. You can understand where businesses are in their current working practices, are there current things they're talking about as a business they're looking to get into that fit with your product or service. So really do that, again, building on that research. Find and build a database of really qualified prospects that can be your first customers in the UK. Also think local. So obviously if you're going up against UK businesses and you have a similar technology or similar product, you have to really show the market that you're serious. So one of the big challenges companies face is when they're first exploring the market is sometimes they can go a bit half-hearted. So they can put a bit of effort in, but don't really go for the full approach. Whereas sometimes if you say to the market that you're serious, and as an example, get a UK office, UK telephone number, show that you have that local presence, it's going to be really important. And there's some really very cost-effective routes to be able to show that presence. And obviously at a later stage, looking to set up a limited company and having a UK base. A good cost-effective way of generating leads is LinkedIn. Again, nothing that's revolutionary what we're saying or anything that it isn't rocket science, but LinkedIn is really a fantastic tool of building through Sales Navigator, building those contacts, keeping track of when someone maybe moves businesses that might prove an opportunity for you, but also getting that direct messaging opportunity. With COVID, obviously a lot of professionals are working from home still, and so it's very hard to contact them through switchboards, through telephone systems. So utilizing LinkedIn to get those direct messages is a good way of getting your product or service in front of them. And lastly, I'm just going to talk about recruiting. You know, we've seen time and time again where companies have struggled with sales is that they've maybe recruited somebody that's a friend of a friend who happens to be living in the UK, rather than look at someone who has that experience in the sector that they're looking to work in. So you may pay a bit more, maybe 25–30% more in terms of staff wages and recruitment costs, but actually look at who's working for your competitors, who has experience of the market, who already has those contacts. And that can be a very, very good way of speeding up the sales process when entering the UK. Thanks for your time. I'd like to hand over to Alex Lloyd from Burges Salmon.
Hi everyone, I'm Alex. I'm a corporate finance director at Burges Salmon, which is a law firm. Get into it quickly, but just a quick bit about us. So if you look at our current roster of overseas clients looking to establish in the UK, we've got clients from the US, Germany, Singapore, Sweden, Russia, etc., etc. And that's a mixture of fintechs, health tech businesses. At the moment, we've got a real estate finance platform, some VR gaming. So all sorts. Some of those have come through our relationships with the DIT, others from outside. And we are doing everything from helping them incorporate in the first place through to complex regulatory advice, if it's a financial services business, say, or whatever sector they're in, you know, employment, incentives, IP, etc., etc. So we're doing a lot of this kind of stuff with businesses just like yours. As I say, we've got 5 minutes, so I thought what I'd do is concentrate on a decision that anyone looking to establish in the UK would be thinking about. And the question we're looking at is it better to incorporate a private limited company in the UK, so a subsidiary in the UK, an actual legal entity, or set up a UK establishment, more commonly known as a branch? And that's an extension of a non-UK entity. There are other ways you might do it. There are agency arrangements. You might set up distributor arrangements, partnerships, and franchises, but we're going to look at that core question: incorporate or not. So why might you incorporate a private limited company in the UK? It doesn't have to be that kind of entity, by the way, but I'm talking about private limited companies here because that's the most common type of vehicle. The most obvious reason is that that company has its own legal personality. It's a separate entity. It can contract on its own terms in its own right. And therefore, theoretically at least, your liabilities in the UK will be ring-fenced in that corporate vehicle. Of course, people might ask for support from the overseas entity in the form of a guarantee or something. But generally, you've got a separate entity able to contract, and its liabilities are ring-fenced. It's really cheap and it's easy to set up and incorporate. We're talking less than £500 in it. Once you've collected the data and the information you need, you can do it in 24 to 48 hours. So that's easy. When you're dealing with your counterparties as well, you know, customers, landlords, banks, whoever, they'll clearly be used to dealing with UK private limited companies. They'll be able to look them up on the Companies House, which is the public register in the UK. And depending on how well capitalized they are, they'll be, and if they've got substance at least, they'll be very useful. It might make your dealings with counterparties easier. Disadvantages: you open yourself up to a slightly broader regulatory regime, of course. For example, the directors of that UK company will be subject to UK directors' duties. You'll also have an increased administration and filing requirements. You'll need to make regular filings with Companies House. You'll need to do that if you operate through a branch anyway, but they're slightly enhanced if you incorporate. Lastly, if it goes wrong and you've got to wind up that company, you've got a formal legal entity, you need to go through a formal wind-up process. Next, if we look at establishing a branch, this is not setting up a separate entity. This is operating as an extension of your non-UK business. Advantages: well, it's limited upfront time commitment, and it gives you the maximum amount of flexibility as a sort of first step into the market. And if it goes wrong, it's quicker and easier to wind it up. Disadvantages: well, it's the converse of the other one. You don't get to ring fence your UK liabilities, and you don't have a separate UK entity to contract on its own terms. You still have some registration and ongoing compliance requirements. You still have to make some filings. And lastly, we can't get into any of the nuance of the tax situation, but you're going to be paying UK corporation taxes, whether you're a branch or whether you've established a subsidiary. Making your computations for those tax returns might be easier if you've got a subsidiary over a branch. Next, I'm just very quickly going to make 2 points on practical things, because we see clients make mistakes on both of these quite regularly. So visas, first of all, there's lots of different categories of visa. You might be looking at a startup visa, an innovator visa, etc., etc. All I want to say really is think about the process and start it early, because the chronology makes a difference, and you don't want to make a technical mistake with the form, and you don't want to be applying for the wrong category of visa. Second, bank accounts. I know this is boring and administrative, but same again, there's no standardized process for opening a bank account across the bank. So think about the documents you're going to need. Do they need to be apostilled or notarized? Same deal. Think about it early and start work on the process as soon as you can. I'll leave you very quickly with 2 of our initiatives which might be of help to you. So we've got a UK investment launchpad. That is a full service to help you set up in the UK. It's lawyers, and it's also project management advice for a fixed fee. So that's to sort of get you started and incorporated in the UK. And secondly, we're launching a new product on the 4th of October called B-Scale. That's about assisting tech startups and scale-ups. It's free access to a suite of automated legal documents, including for a very early stage fundraising. And we've got a pricing model and staffing model, which is all about bridging the gap between the need for advice for a tech startup and the financial resources available. So that's me. Thank you very much. I'll hand it back over to Amy now.
Great. Thanks very much. That was really interesting. And it seemed like the key highlights there were: do your research before you get here, identify the gaps in the market so you can clearly define your audience, to enable you to really specifically target them to gain traction as quickly as possible. Start early when you're looking at visas and banking facilities to make sure that the process can happen as quickly as possible. We're going to go to Chris Moore now, who's going to address your questions in the Q&A for each of the speakers. Chris.
Thanks, Amy. And we've just got a few minutes, so we'll just do a few of the questions. The first one is actually for you, Amy. If a company is thinking about probing the UK market and wants to get some insight into the market, can you provide help with market research and understanding how to navigate the market?
Yeah, well, we have a team of highly experienced project managers. There are 4 within our team, and they've been doing this job for years, and they know the UK market really, really well. You know, they work with hundreds of companies, understanding their needs, and they can help to give you the information that you need across the breadth of the spectrum. You know, from what's your budget to get set up in the UK? Where's the best place to get set up in terms of what's the ecosystem that will support their particular subsector? What's the cost of living, and thus what wages will they need to pay? But they also have a really good understanding of the demand for certain subsectors.
That's great, Amy. Thank you. Next question is for Alex. Alex, you just went through a lot of detail very quickly, and I think companies recognize that it is quite complicated to navigate this environment to work out what is the right kind of entity. So if they're thinking about coming to the UK, at what point should they be getting in touch with you? How far along do they need to be in their thought process?
I would get in touch as early as you possibly can for a number of reasons, because you need to think about your tax structure, and that could be relatively complicated. You need to think about your visa applications, which categories are you going to go for. You need to get in place all the boring stuff about bank accounts and payroll and all of that stuff. All of it takes longer than you think. So I would do it early, very early is the best point. And you're not going to be wasting anyone's time if you have an initial consultation and just set out a real detailed steps plan. The way I would do it, and do it as soon as you can.
That's great, Alex. So I expect you'll be getting some contacts reaching out to you quite soon. Thank you. Just moving to James then. James, you talked a lot about how you can help businesses to expand their client base in the UK. Again, some of those companies may think, well, the UK is quite far away for us. We're not ready to move yet. So to what degree can you help them to get started with clients before they actually arrive?
Yeah, it's about building a sales pipeline, a database of organizations, but also enable them to do the research. Is the UK going to be a market for them? So by undertaking that work and having live conversations with prospects, that's the best form of validation. What I would say, you do need to still think about how you're going to come across to prospects. So by having a UK address, having a UK telephone number, will actually help you get a better response in that initial phase. So I think as soon as you can, and obviously when COVID, hopefully things improve, then my biggest advice is get on a plane, come to the UK, meet with people, and build relationship, network, and explore the opportunities. But yeah, the early work is so important to validate the market for you.
Oops. Thanks, James. And last quick question for Joanna. Again, similar kind of territory. The companies often leave the engagement on PR and their identity and engaging with the kind of customers and raising their profile until a bit too late. Again, can they do things before they actually arrive?
Yeah, I mean, very similar to what Alex and James are saying. Absolutely. I mean, when we talk about market entry, that can be for anybody looking at the UK, maybe a year out, and just wanting to get everything ready, to those that are here and need to launch. But yeah, it's really important to start early. I'm just really repeating what everyone's saying. Start early, because, sort of when you work with a client and you're just about to launch them and actually their website's not right for the UK market, it makes a big difference. It's all about, trust and building up those relationships here. So you don't want anything that's going to detract from, when you start engaging with people, they're immediately going to look you up on Google and find you on LinkedIn, and anything that's just jarring or wrong is really not going to help you. So start early, absolutely.
Thanks, Joanna. And I think that's all the time we've got for these first quick questions. So I'm going to pass back to Amy. Thank you.
Great, thanks very much. So to the next part of the session, I'm going to introduce Justin from Fortunis Venture Capital, and then he'll be handing over to Chris Moore for the panel discussion with some tech businesses that we've already supported to land in the UK. Justin.
Thank you, Amy, and a big welcome to everyone at the Tech Week. My name is Justin McRae. I represent as the Chief Operations Officer for Fortunis Capital, which is invested in by the McRae family office. Again, welcome. Fantastic week. Thank you, Amy. Thank you, DIT. Who am I? Just explain, Chief Operations Officer. It's my job to find the best opportunities in the world to invest in the tech space. So pretty relevant while I'm here. Give you a bit more of an idea about us and about where we sit in this space. Our mission is to seek out and find the best tech to invest in from around the world, bring that to the UK and develop it, and then expand it out around the rest of the globe. So I'm excited to be here, and I hope you are as well. Today, I'm going to talk about a couple of things which are a bit more lower level. You've heard some great strategic advice. I'm going to start off again with why tech? Why do we invest in tech? Today, we're facing a large number of problems in our society, in our environment, an increasing number of challenges. How do we solve that? Well, through tech, through science, through intelligence. And now, more than any time in the world, we have the ability to solve these problems through tech-based solutions. What does that actually represent for our society, for our environment, and for investors? It represents an enormous commercial opportunity that can actually be positive and solve these problems. So for the first time in the world, in our history, we believe we've entered into an age of innovation where tech can solve our global problems. And that brings an element of commerciality on a scale that's hardly been seen before. So that's why we're in the space. I know why you're in it. Let me tell you a little bit about what we look for when we look to invest in tech. Firstly, we want the most amazing teams or the most amazing founders. We want people who are so committed that this is their life's work. Because trust me, when you go down a venture capital journey, you have to be so committed to achieving that journey. You'll be working 3, 4, 5 years, morning, afternoon, night, forget holidays, and your investors will want to see that commitment from you, because you've got a long way to go, but I can at least tell you that the journey is a hugely enjoyable one if you're committed. So firstly, you have to have that commitment. This is just not just a business for you to come and bring to the UK. This is a way of life. You're talking about venture capital and investment and tech-based solutions. That's the starting point. Now, your idea, what we look for, what everyone looks for, clearly has to be commercially viable. So it has to make money, not on day 1, not on day 2, or even day 5 or year 5, but it's got to make money. It's got to show value and how it's going to produce revenues. And that commerciality has to be scalable. So once you've got past your first setup phase, which the guys have spoken about, you're going out to market, you're competing, you need to be able to scale globally. And that's certainly what we would look for in an opportunity, because global scalability equals commerciality, which equals a higher sales price, which is pretty simple. Secondly, you need to have innovation. We don't want to see the same idea. We want something that's different, that can stand up and be counted by itself and compete as a standalone innovation. And right now, in the age of innovation, you can achieve that through tech and science much easier than people could 20, 30 years ago. So, you know, you're at the right time now. One of the last things we want to see is solving a problem. We are an impact investor, but it doesn't mean we don't like to make money. We do, as all investors do. But if you're solving a problem, generally that means that you're more scalable. And generally that means that the uptake to your tech is going to be higher by society. So for example, we have fintechs that solve debt problems, which, you know, in this day and age, a lot of people are facing. We have biotechs that are solving really prominent health problems. So if you're solving problems, you're generally going to be more successful as opposed to standing alone. I think, you know, the one thing that I'll pass on coming up to the end of my time talking to you guys in this 10 minutes block is that you need to be resourceful. Too often when we invest into a client, we see people or founders looking to burn cash, the cash burn as a way of solving problems. For us, be resourceful, go out and hustle, get deals. Don't use cash as your only resource for advancing your tech and being successful. Work those longer hours, ask for favors. The UK government, for example, is here to support. The UK is the premier destination for tech in the world. It has got the largest access to capital base to get investment in the entire Western Europe. In fact, this side of the world. And it's had that title of having the largest investments for 23 years running. You know, the government of the UK offers grants, research and development tax credits. There's huge incentives to set up here and be successful. So you really do have support of UK government. And the UK, one of the biggest things you probably need to look for as one final piece of advice is that our talent pool is enormous in the UK for hiring. And it's there for a reason. You can find the best people here. I think finally, I wish you all good luck. I hope to see you sometime in the future, and I'll hand back to Amy. Thank you.
Thanks very much, Justin. We are going to go to Chris Moore. Chris Moore.
Thanks. Thanks, Amy, and good to be talking to you this morning or this afternoon, wherever you are around the world. Just to complete the introductions, I'm a technology specialist working for the Department for International Trade, supporting companies that are looking to set up in the UK for the first time or to expand their existing business. So I work very closely with Amy and her team. Before we get on to the panel, and I wanted to say thank you very much to Justin for giving us some tremendous advice, which I'm sure everybody will really appreciate going forward. We did a poll earlier. I now wanted to just quickly run through the results of the poll. And the first question was really about status of where you are in the process in terms of thinking about the UK. And more than 50% were actively thinking about coming to the UK. About 40% were very early still in that process. And in terms of the raising funding, well, the majority, about 60% of people are around the seed stage, with perhaps around 30% at Series A and a few others at other points. And then thinking about the spread of technologies, well, we've got quite a spread today. Majority just slightly in software as a service, but at around 40%, but then a similar split between fintech, AI, and other technology areas. And finally, in terms of looking at the enthusiasm, the optimism for coming to the UK, I'm pleased to say that the majority were very enthusiastic about coming to the UK, so more than 60%. About a third were the kind of next stage down, quite optimistic, but not quite there yet. And finally, the remainder were not quite at that point yet. Okay, without further ado, I now wanted to bring in the panel. We have got a fantastic lineup today, and in no particular order, could I ask each of the panelists to introduce themselves and to just spend just a couple of minutes explaining a little bit about their company, where you are in terms of your UK journey, and also what you're planning to do in the future, but just in a couple of minutes. Akash, can we nice to see you, and can we start with you, please?
Yes, thanks a lot, Chris. It's great to see you. I'm Akash Naidu, co-founder and CEO of The Startupreneur. We are trying to build an end-to-end digital ecosystem to support entrepreneurs, startups, and small businesses. We began our journey in 2019. We started off in India, but we expanded to the UK, and now we are seeing a kind of a global market from the vantage point of UK. So yeah, I think the vision for us is for entrepreneurs and businesses to be able to build and scale their ventures using our platform. So thank you very much, Chris, for the opportunity.
Thanks, Akash. Can we move to Jim, please?
Thanks, Chris. Good morning, and early good morning to all of you from Canada. I'm Jim Gassel, co-founder of Terrifio. Originally based here in Canada, we set up our group in the UK in 2019. We're all remote with a team of about 8 people at the moment. My co-founder is based in London and has been for the past 18 months. Terrifio is a legal tech platform, and it relates to my work as a registered patent agent, or what you might call a patent or IP attorney in the UK. It is a team-based client viability tool for IP attorneys and law firms. We help attorneys filter and begin educating their inbound prospects all before having to invest any business development time. It is a particularly challenging part of the patent profession to introduce new prospects to a firm. It's a particularly challenging task because of the nature of the work that we do and the kind of clients that we really need to attract. And often we're doing it in an ad hoc way that follows a gut feel after a meeting and several emails. Currently, we are pre-release. We will be starting to onboard our first users this fall. In 2022, we'll be scaling in the UK as well as some other global markets. I'm delighted to be here and happy to participate in the panel discussion. Thank you.
Thanks, Jim, and we really appreciate you participating from Canada. As you said, a very early start. Fran, can we move to you, please, now?
Hello, Chris and everybody. Yes, my name is Francisco Kensky, Fran for everybody. And I'm based in Buenos Aires, so it's early for me too. And I'm the founder of CloudGaia. CloudGaia is a boutique multi-cloud Salesforce Platinum partner that started in Argentina, and thanks to the IT successfully moved to the UK, from where we expanded to the several countries of Europe and the US. We help big customers such as Coca-Cola, Euro-Pacific Partners, Diageo, MetLife, Shredders, and other big companies take out the most out of Salesforce. And it has been a very good journey with the DIT, helping establish in the UK, having our holding company there, and we moved our legal headquarters to London, and we're very happy with that strategic move. We grew a lot. We are 5 years old, and thanks to that, we grew very much, and all that growth was organic. So we never received any funding. All our growth has been from the business, and so I really like the invitation and giving back to the rest of the community, because we have received so much from you guys. So thank you very much, and I'm open for helping others take the same direction.
Thanks, Fran. And again, we really appreciate you dialing in from Buenos Aires, because as you say, it's not in the same time zone. Okay, so thanks very much to the three of you for participating today. And I think what I'd like to do is to start casting the clock back a little bit and putting yourself in your mindset of where you were a few years ago, before you'd even thought about the UK, and you were thinking, we need to internationalize, but where should we go? And given the fact that you're coming from India, Canada, and Argentina, Europe seems like quite a long way away, but of course the UK is not the only destination. So what was it that made you think about the UK first? So let's start with you, Akash. What was your rationale for coming to the UK?
Yes, yeah, thanks, Chris. I mean, to start with, I'm an alumnus of the London School of Economics, the LSE, and my brother's also, who's the co-founder, he's also an alumnus of the LSE. So we had a broad understanding of the UK market, maybe at a personal level, because we studied there, we knew what living in UK means. But that was not the key reason for us to move to the UK. It was more strategic in nature, because yes, India also offers a very strong and promising tech ecosystem, but it is primarily concentrated for the domestic market. But we, having studied in the UK and having had a global perspective, we were very clear from the start that we wanted a global presence, a global reach for what we were doing. And UK sort of became a very good strategic decision for us, because being viewed as a UK headquartered company gives us a great global visibility. We've been able to tap actually the smaller untapped markets, the smaller countries, maybe in East Asia, countries like Philippines, Vietnam, Indonesia. Such countries, they recognize UK brands, very greatly. Even on the Western side, if you go to markets like Brazil or the Latin America, or even we've been to places like Trinidad and Tobago, so on and so forth. So even these are like untapped markets, but very, very good markets. Being viewed as a UK headquartered company gives a great global visibility. In fact, the way we have been perceived as a startup is actually gone on, many levels up. So yeah, I would say it's definitely been a great decision for us to move and operate out of the UK.
Thanks, Akash. Jim, how about you? I mean, again, there were other destinations, I suppose, you had on your shortlist, but why was it the UK that was the most important market for you ultimately?
Canada is, I would describe Canada as quite far behind the UK in terms of tech ecosystem, outside of several, Toronto, Waterloo, Montreal, Vancouver, but we're a very, very large country spread out. And we came to the UK back in 2017 on another business matter and went to a conference, and we were it was quite clear to us that the things that were happening in the UK as an integrated network was a scale that certainly I hadn't at all appreciated. And I could say that the UK, when I tell people that you know that we're focusing our work in the UK, here in Canada, people aren't really familiar with what's going on in the UK. So we're absolutely delighted to be there. It was the right place for us. It continues to be, and we look forward to scaling up.
Thanks, Jim. And Fran, again, UK is one of perhaps several locations, and you think of the traditional linkage between Latin America and Spain. So what was the most important factor for you in choosing UK ultimately to build your business?
So our short list was the US, UK, and Spain. Of course, Spain for the language, for the climate, and the reason we were moving and expanding, it was because our customers were asking to be more near shore. So from Spain, attending to Coca-Cola and Diageo at that time, that were the two customers that were asking, was you know, the top in the short list. US was we took away US as a holding place because of tax reasons. The whole operations would be taxed in the US, and the UK and Spain had similar tax regimes where our foreign income will be excluded. So and Spain rejected our working visas for our employees. We need to move from Argentina to Europe, our top technology leaders who will train local employees. And the UK, we applied at that time for 10 positions, and they told us, why so few? Don't you want 20? So it was, so that was, and of course, again, in that, the DIT help us, introduce the right people. So it was everything very easy and friendly. And now we are doing the way back. We are from the UK. We are starting the Latin American headquarters in Uruguay. So it's funny how it goes. Uruguay has also a very friendly regime for IT companies, and it's like and the right incentives, and so helping from Colonia del Sacramento set up like a sort of a Silicon Valley from Latin America from there. So it's like a way around. And our last investment was in Poland. So now we have our UK, Spain, and Poland based operations. Everything held from the UK. So we're, yeah, that was the reason.
Thanks, Fran. That's great to hear. I understand that our fourth panelist, Adam, has actually now been able to join us. I think there's some technical issues before. So Adam Jaffa from VOI app, could you just give us a quick intro and explain a little bit about your company and why the UK and your immediate plans?
Absolutely. Thank you for that. So my name is Adam. I was born and raised in the UK from Brighton, and moved to Sweden a couple of years ago to study at university. It was a short trip at university, dropped out, and founded a company with 3 other guys, 2018. So we just hit our 3-year anniversary, went faster than we expected, went from 4 founders to 800 employees in the past 3 years, successfully launched our product in about 80 markets, and raised over $300 million to date. So the company name is VOI, largest micromobility e-scooter sharing company in Europe. Started off in Sweden and then slowly made our way to other European markets. It's becoming a regulated space, and UK was also always kind of on our radar, but it wasn't actually legal, neither private or rental scooters for a long time until last year, and that's when the various cities started handing out kind of operating licenses. And our approach is very much, ask for permission, not for forgiveness. So we started applying for these licenses and tenders, and have been very successful to date. We've been operating in the UK for 1 year now. We're live in 16 cities in the UK, many of which are exclusive. And already we see the data coming in from 1 year that kind of modal shift from cars to scooters from our user base is a staggering 35%.
Thanks, Adam. That's a great story, and I think everybody walking around urban environments in the UK has seen your presence in terms of changing the landscape of transportation. Okay, let's move on and think about another question. So, as you've begun to build your businesses in the UK, there are clearly things that you expect, and there are things that surprise. So, Jim, can I come to you first and just ask? As you came to the UK, what was it that really surprised you? Was it, the market, how that worked, or the customers or engagements? So things that you were not perhaps expecting.
Because we're pre-release, I can't give much insight in market reaction to what we have yet. But I can say that the surprise for us really was the reception that we had to be able to build contacts in the UK. Lots of talent, lots of willingness to help, and every time we attended a meeting, it simply reinforced for us that we were in the right spot.
That's great to know, Jim. And Fran, you already said that there were a few things that surprised you in terms of the willingness to, hey, bring some more people. Let's help you further with visas. Was there anything else that surprised you, perhaps particularly with your customers, that you found so far?
Well, actually, everything was so easy. No, it was so friendly. That was I come from a very bureaucratic and complicated country for doing business, not only with the government, with the customers as well. So I think that what surprised me with the customers was that a yes was a yes, a no was a no. 1st of August was 1st of August. It's like certainty, no? In the business, what you need less is uncertainty. And when we moved to the UK, what surprised me most was like the power of your word, no? The thing that things were what they were supposed to be, and not the other way around, as we're used to. So I think that's crystal clear rules of engagement and messages. That was what surprised me the most, and luckily we didn't have bad surprises, so it was all good surprises.
That's always good when that happens, when you get things that are slightly better than you expected, and it's clear that the UK is one of the easiest places to do business in worldwide, and I think Amy had some of those statistics in her presentation. But let's come to Akash. How is your experience? I know we talked right in the beginning of you were just kind of beginning to navigate the UK, and of course you were here before at LSE, but coming afresh with a new company, how was that experience in terms of engaging with your customer base and the market in general?
Yes. Thanks a lot, Chris. Actually, I would like to thank Lee and you for helping us initially, at least trying to understand the landscape, what was out there, because when we entered the market, we just had a broad picture that we want to look at UK as a strategic location to expand to. But entering the market, understanding who are the local players, what is the tech scene, that is something that takes a while. But thanks to the kind of support that we've received from DIT, through all the various specialists, we've been able to try and understand the players much more quicker. But what really surprised us is the kind of worldview that we got being located in the UK. Had I been perhaps in another country, my view would have perhaps been restricted to that particular country. But DIT offered such an excellent ecosystem globally because it has offices across almost in each and every country across the world, and there are like so many events and workshops happening, so that we try and understand the market beforehand, and that kind of gave us a fantastic worldview, and it accelerated our learning curve much faster. When I say what we would have taken a lot more time to experiment and figure out and learn, that learning curve got reduced quite drastically. We were able to sharpen our propositions to a large extent. I'm sure there were a lot of developments that we made since the last time we spoke, and so yeah, I think that kind of worldview and sharpening of our business model that really happened in the UK. A general sort of surprise which we were not prepared for, but was a learning for us, was we tend to take things for granted. We don't really we tend to underestimate what exists out there already. But when we went to the UK, we got a very realistic perspective. So we had to kind of take our offerings one notch up, and that actually helped us while we were going global. So in that sense, I would say it was a great learning and a great experience for us in terms of getting market access, market research, and an overall global perspective as an entrepreneur.
I think that we lost Chris.
Okay, sorry. My microphone was. No, I'm here. Can you hear me?
Yes, now we can. No, we don't.
Can you hear me okay?
Yes.
Okay. So, Adam, I just wanted to ask the same question in terms of understanding what was the surprise to you. You're in a particularly interesting situation because you grew up in the UK, but then moved to Sweden and then come back in terms of engagement with the market. What was the surprise for you from that?
Yeah, really good question. I think we were also, fortunately, no negative surprises, but mostly positively surprised. I think by the demand, actually. So obviously, we've launched in many markets before the UK as well, but we really did see quite the uptick in the UK as we were deploying our scooters throughout various cities, where we just get the confirmation again that people love scooters, and you might not think that if you only read the headlines where people have various opinions about them. But I think in general, looking at the consumer and the user base, people generally appreciate the fun and personal freedom that they get from riding these vehicles. And I think more importantly, the convenience as well. And we also see, in comparison to e-bikes, for example, or bikes, that people are much more inclined to try a scooter than our e-bikes. So we reach kind of 1 million rides way faster with e-scooters than we do with e-bikes. And to add to that as well, I think also positively surprised by kind of the appetite from authorities and government and council to happily be part of the discussion and support kind of innovative tech that actually solves problems. And I think e-scooters are just that, but that's not something we should take for granted. And if we are to continue succeeding, then we really need to keep innovating.
I'm just going to come on because it sounds.
Sorry, let me try that question again. So the question was for Akash and was around what is the your perception of the tech environment in the UK in terms of startup companies and the tech environment. What do you think we're going to be seeing as key themes going forward over the next couple of years.
Yes. Thanks a lot, Chris. I've been following the UK tech ecosystem for a while now. I have been a startup ecosystem enabler in India. I ran and managed one of India's largest startup incubator, also worked with Facebook, managed the startup programs. So I mean, I did develop a broad understanding of how the ecosystem works, but when it came to the UK, it was quite a thriving tech ecosystem, mainly because fintech, and especially out of London and other places.
I think I may be having some communication issues, so I'm going to switch off for a minute.
Yeah. So the fintech ecosystem has been really strong because the kind of fundraise that has happened with regards to fintech startups in the
Akash,
UK.
did you hear my question?
Yes. Did. Are you able to hear me, Chris? So I'll just continue then. I think the fintech space has been quite interesting. We've seen a lot of the UK-based startups expand globally. I think Tech for Good has been a great theme that we've explored while in the UK, because it's kind of picking up quite a big deal. Even mental health startups is a space that I've seen growing rapidly. EdTech has been doing well. Mobility, electric vehicles especially have kind of scaled up drastically over the recent times. I would say all in all, it's a great place for any tech venture to think of growing and expanding their business. Even for Startupreneur, we are a digital first company where we help entrepreneurs build and launch their ventures digitally. When I say this, like right from training the entrepreneurs digitally to offering digital talent, and even offering the right kind of tech to build their POC or MVP and launch it in the market, we kind of tend to support them. So I would say for a company like ours, UK becomes a great tech ecosystem, and I'm sure for the other startups as well.
Thanks very much. This is Joanna. I'm just going to pose the next question whilst we see if we can get Chris back in. And this is really to all of you, so I'll go around. What was the best piece of advice you received from someone in the UK? And similarly, what advice would you give, would you pass over to a tech company, another tech company looking at the UK? If you could stick to one on the way in and one on the way out, if that makes sense. So Jim, maybe if I start with you.
Yeah, thanks, Joanna. I'd say the best advice we received was to dive in, go to events, shake hands, where you never know who you'll meet and how they'll help. And the pay it forward attitude is everywhere from what we've seen in the tech ecosystem there. And I'm not sure I've seen it elsewhere. I certainly have seen it in the UK. The second part of your question, Joanna?
What advice would you pass on to another tech company?
Okay, sure. What would my advice be? Well, my advice would be that we've been working with Joanna's group for 3 years now, actually, and having a rep on the ground in London to be able to open doors, especially if you're from out of the country and you're coming into London, coming into the UK to try and check out what the scene is and whether you really want to be there. You really need somebody who can get doors open for you quickly, and Joanna's group did that in spades for us. So I would highly recommend some advanced planning, and as some of the other panelists have mentioned, get in advance and get a handle on what's going on, and then you can really adjust your plans accordingly when you've done that.
Thanks, Jim. As you know, that wasn't rehearsed, everyone, but thank you very much for that comment on us. Chris, just for your information, that was just the question on best advice in and best advice to pass on, and I'd only just got to Jim first, so I'll hand back to you.
Okay, so you just Jim has answered that question. So shall we pass on to Fran then to comment? And apologies for dropping out there. I think there was a connection issue at my end. Sorry. So Fran.
Yes, well, I will. Yeah, I will agree with Jim on the advice given to everybody that get in touch with the DIT. They're awesome team. I remember that you, Chris, moved from one side of the city to the other to meet my business partner Nicolas. And here in Argentina, Carolina has been really helpful. Jorge also. So you have a great team, and it's available for everybody to get in touch with you, and you will receive a lot of help. So I will agree with Jim on that. And the best advice I received from you guys was to set up in I think it was level 39 in Canary Wharf, the co-working place. So that was great. We met great people there. It was very a great community, and everybody sharing. So it was that helped us a lot. Locations is very important in tech. We have this open mind and of collaborating with other companies. So being in a co-working space is, I think it's a very good idea. So thank you for that as well.
Thanks, Fran. Adam, can we go? Sorry, Jim, did you want to come back and say something there?
Yeah, just quickly. The DIT has been fantastic for us, and we are now part of the Eagle Labs legal tech incubator accelerator, and it's been fantastic. I just wanted to add that to my earlier answer. Thank you.
Thanks, Jim. So Akash, how about from your perspective in terms of those early helpful things, not just from DIT and the participants here, but maybe from the broader community as well?
Yes. Yeah, thanks, Chris. I was going to thank you, first of all, because one of the early advice that you had given us, you had pointed us to a list of resources of potential organizations that we could work with, and NACU, which is the largest student enterprise body in the UK, was actually pointed out to us. So we ended up doing a pilot with them, which proved to be very helpful for us in terms of a UK market entry. But beyond that, from a broader community perspective, we've been mentored by Nick Newman, who's a partner VC at Emerge Education, a leading edtech VC. So we were actually introduced to him as part of the London and Partners program, through which we got very strong, very sharp mentoring. We've had like multiple mentoring sessions on sharpening our route to market. We've already been told what is already being tried out in the market. So that actually saved us a few years of experiments that we would have done otherwise. And that kind of gave us a lot of value add and helped us approach our problem in the right direction. So I would say, big thanks to DIT. I'm not saying because everyone else is saying, is because we really mean it, and we've received the kind of support and constantly from the time we landed in the UK. So Lee Worthing has been supportive, and of course we got a great worldview from the broader tech ecosystem as well. Thank you.
Thanks, Akash. And Adam, from your perspective, what kind of advice have you received that's been really useful and kind of guidance and introductions?
Yeah, I think this one was mentioned already, but I think it's really important to have people on the ground in the UK when you're entering, that just know the market, know the culture, know their way around. Other than that, I think we also learned that there's no blueprint for success either. So it really comes down to your ability to kind of adapt and navigate in a new territory. And you won't have all the answers. And I think the best advice I've been given is to kind of be extremely confident in our ability to execute and get the job done, but constantly question our methodology and iterate on that until we get it right.
Okay, that's good. Thanks, Adam. I wanted to move on and just think about some of the things that have been a bit more difficult, because we recognize that when you're building a business, and particularly building a business internationally, not everything goes in a straight line. So I guess there have been some difficult things for you to deal with in the UK, and I'd be interested in what an example of one of those, and perhaps how you've responded, how you've got around it, or how you've dealt with it. So Fran, can we come to you first?
Well, I think that maybe it's a very common, but opening the bank account was really difficult, and we had the Santander, the same bank in Argentina, that was working with us and in the UK, and it was like 8 months of my nightmare. So have that well from scratch, yeah, and we finally solved it because we change of a brand, and you use a brand that was in connection with the IT. So again, thank you for untying that. So that was the thing that was more difficult for us, and it shouldn't have, because we were the same customers in one place than the other. But anyway. From CloudGaia, that was.
That's interesting to hear, Fran, and I think lots of companies do struggle with bank accounts, and that's where DIT and our professional service partners can help with that. And we have been down that track to support companies many times. So, but it's good, I think, for this audience to recognize that opening a bank account.
We lost your audio.
Is not necessarily straightforward, but there is help out there. Jim, can we come to you? Hello? Jim, can we come to you and ask the same question? What has been difficult for you and how did you overcome it?
Yeah, sure. A couple of things come to mind. In an earlier iteration of our platform, which we launched in London Tech Week in 2019, we were scrambling to get our MVP ready. Meanwhile, I was scrambling to get my mind around the GDPR. So we had some frantic moments to really understand what it is we needed to do and comply before we actually hit go on the platform. And we found some great help to sort of get us through that thicket. And the other, it really is, as Alex mentioned earlier, we've had, we've been caught by a few last minute deadlines with things at Companies House. And we could probably have done that a little bit better. So boots on the ground, always a good idea.
So again, I think what this illustrates is starting these conversations with people like Alex and Joanna and James and other advisors that can help you to get started and to put all of those things in place early. Adam, could we go to you and ask the same sort of question in terms of what was difficult? I mean, you knew the UK quite well because you used to be here, but I guess going to Sweden and coming back, that presumably presented some challenges.
Yeah, exactly. And I think an interesting challenge with kind of consumer products is always kind of the potential psychological barriers that you may meet as well, right? So this reminds me of kind of, when Uber launched, and the psychological barrier is, you're really going to get into a car with a stranger, or Airbnb, are you really going to live in a stranger's house? But eventually those become completely normal behaviors. And I think it's something that we kind of saw as well with, suddenly there are scooters all over the place. So kind of on a psychological level, how do consumers and people react to that? So I think an interesting challenge is kind of perception of the product as well. And then also the media has their own opinions on things, and then headlines, one day they love you, one day they hate you, kind of thing. So kind of dealing with, I think dealing with the perception of the product has been an interesting challenge. Another one has been kind of around, and they're tightly connected, I would say, around kind of accessibility and looking at dealing with vulnerable groups, for example. But that's something that we've learned to kind of involve them more and more, whether it's various partners that are working with supporting vulnerable groups, to involve them more and more in the discussion, for example, that feeds into our product development and how we can make our product kind of more VOI for all, and think about accessibility as a part of the product design as well.
Okay, great. And finally, Akash, in terms of you, in terms of unexpected challenges and how you dealt with them.
Yeah. I think there were a few challenges, I must say. One is purely from our venture perspective. So I think the market size that we were trying to address was slightly smaller when we kind of entered the UK market. But that kind of got corrected, and we were able to evolve to an offering which had a greater market size. And that's something that happened because of the learnings that we got from the UK market when we hit the ground. We kind of got learnings of what works and what doesn't, and that kind of helped us sharpen our proposition. And the other learning has just generally been around the time it takes it is to kind of gain certain foothold in the market. Like it does happen. It happens slowly but surely. Maybe it could have been because of the sector that we've been in. But yeah, you need to give it that time and invest and do your research and build relationships, and slowly things will start to happen. So it's just been under a year since we moved to the UK. So we moved end of last year. So we're gaining a foothold, but we've definitely seen that growth happen over some time. So yeah, that's been the plan.
Thank you. And as we're coming up to the end of this particular panel, I just wanted to say thank you to all four participants. And I think the take-home messages here are quite clear. Thinking about your plan for the UK, for your internationalization journey, planning to start early, so engaging with all those professional advisors before you perhaps think you might need them, and not making too many assumptions about UK customers, but listening and getting the experience of others who've already been there before. But once again, Fran, Akash, Jim, and Adam, thanks very much. And I'm now going to pass back to Justin for the VC panel. Thank you very much.
Thank you.
Hello, and thank you, Chris. We're moving on to the VC panel, which I'm very excited to introduce some of our panelists. I wonder if we have them here. We're looking for John from Smedvig Capital, Lucas from FoamCap, and Seb from Balderton. We have John. Thank you very much. Perhaps, John, if I could just ask everyone, around about 3 minutes, a quick introduction from yourself and your firm, that would be wonderful. John, if you'd like to start. Thank you.
Yeah, please do. Thank you for having me. John Lerner, I'm a managing director at Smedvig Capital. We're a London-based fund doing Series A and Series B investments across the UK and the Nordics. We've been doing it just over 25 years now. That's obviously changed a lot over that time. But in general, we're still doing the same thing, which is try and find young, fast-growing companies that we can both give them financial capital, but also help them along their journey with any support that we can give from our organization. By background, I'm an ex-consultant, so I did electrical electronic engineering at university, and then was at the Bain & Company doing consulting on global corporates for quite a long period. And our whole team has the same background, so very much deploying that consulting skill set to small, fast-growing companies.
Thank you. Much appreciated, John. Perhaps, Lucas, you could step in.
Yeah, perfect. Hi, everyone. My name is Lucas Stoops. I work at ForceOverMass Capital. We are an early stage VC fund, and we invest across the UK and the rest of Europe. But I would say mostly in the UK. I think 70% of the business we do is in the UK. And we invest in what I call Seed Plus, Series A and Series B companies. We typically tend to focus on the B2B space. B2B or B2B2C. We can also do consumer, but we do it less, in all honesty. In terms of sector, we're quite broad. We're quite heavy in fintech. 40% of our fund is in fintech, but we can also do, the classical SaaS companies to gaming, and you name it. We have quite a broad range of topics we like to invest in. If you were to think about us as a company, so we have a small seed fund, which we do very small tickets, 50 to 100K. But we also have a growth fund, and that's the main fund. That's a 100 million fund where we invest tickets of, let's say, 1 to 2 million to begin with, but we can go up all the way to 5 to 10 million across the life cycle of a fund, of a fundraiser to companies. So again, early stage, UK, Europe, ideally B2B, and let's say 1 to 2 million to start as an investment.
Thank you, Lucas. Perhaps Seb, you could finish for us.
Great to meet everyone. I'm Sebastian. I'm sorry. I'm an investor at Balderton Capital in London. We are a venture fund that's been around for about 2 decades, based out of London. Initially, we're Benchmark's team in Europe and then transitioned into our own fund. Invest out of 2 funds right now. One which is an early stage fund that's sort of 1 to about $20 million tickets in seed Series A companies. I think the majority is sort of Series A or thereabouts, in an $8 to $10 million range. And then as of last year, we also invest beyond that from a new fund that's $680 million, and that does growth tickets. So that's Series B, Series C, and beyond. As a fund, I think we've been around quite a long time in London. We've seen the ecosystem in the UK and Europe change quite a bit in that time period. But I've always kind of invested with the same thesis, which is that Europe's a great place to build category-defining companies, companies that can either go and build out a large new category or become winners in it. And we've consistently tried to find those teams across Europe and back them. One of the other things we do, and which we found very valuable, and which we've invested in a lot over the years, is to build out a platform, which essentially means we have a team of about 15 people or so who work on supporting portfolio companies on anything from marketing and PR to legal to finance to talent and so on and so forth. And then personally, I started life as a consultant, then joined an e-scooter company that was a competitor of VOI's called Cirque. Kind of built out that business from 10 to 1,000 employees and then back to less than 600. And joined Balderton about 1.5 years ago. And I primarily invest in consumer and in B2B SaaS for small businesses. So anything that kind of gives a rapidly growing business or a small business what I like to call superpowers, whether that's internal processes, productivity, anything like that.
Okay. Thank you, Sebastian. Let's keep the order, guys, going through. I'm going to go to the first question now. And if John, you want to start, please. I think probably it's going to be the most important question, which is, how do applicants get in touch with you? How do they apply to your fund for investment?
So we're super open. We've got a well-published email address on our website and a type form where people can just put in their application. Most of our email addresses are public. People get in contact on LinkedIn. So lots of different ways. We try and look at everything that comes in and genuinely do. As you go through the type form experience, it very much takes you through a journey of making sure that you are a fit. And by doing that, we sort of reduce the number of inbounds that we're just going to have to say no straight away to. So just checking really basic things like, are you in a geography we invest in? Is it check size and a series maturity of company that we invest in? But other than that, we're very, very open.
Thank you, John. Lucas.
That's the same for us. We have a lot of LinkedIn inbound. We also use an email address called pitch@fomcap.com, so PITCH. Quite easy. Ideally, a warm introduction always is still a bit the best, I would say. But again, like John as well, we look at anything that crosses our board. So.
Okay, thank you, Lucas. Sebastian.
Yeah, similarly, a lot of inbound ability to contact us, kind of with a cold introduction. We also try to speak a lot with different angels and earlier stage funds, understand their portfolio. So. If, for example, Lucas invested in you, in all likelihood, he will hopefully put you in touch. And one other thing we do, and I think a lot of other funds do as well, is we've started doing a lot of proactive research. So we dedicate significant resource to understanding up and coming sectors and technologies, and find people within them who are building interesting things, whether that's through GitHub, LinkedIn, conferences that are coming back, things like that. And I guess the only other thing that we do that's very helpful is we do a lot of kind of open office hours or pitch events, things like that, which are always extremely helpful. And we hope that we can do more and more of those in person, because there's nothing better than to talk about your business and then grab a coffee and get to know you as a person as well.
On to the next question. John, as an investor, what really stands out for you in an applicant's pitch?
Yeah, I think that's difficult. I think we've heard everyone on this panel talk about investing across different stages. And as you invest across different stages, there's very much different things that you're looking for. So we don't do so much seed, so I'll let Lucas and maybe Seb talk a little bit about what stands out there. If I focus on Series A, it's really about having proper product market fit and a real vision. And if you can get those two things over, so you have the vision, the passion, and you can prove that what you've got already is really working, you really understand who your customer is and why they're buying you, that's what really cuts through everything else, because ultimately that's what will get you from Series A and beyond. And I think that wraps up all the other great things we look for, like culture and quality of founders, that can all come across in that vision, passion, product market fit.
Thanks, John. I mean, a lot of our guys and girls here today are seed and round 8. That's really helpful. I think, Lucas, if I could ask you, what are the common mistakes that you might have seen or your team?
But there are a couple of things that come back. I think, but maybe the first one, which is most relevant, I think the capital ask needs to be a bit in line with where the business is. Sure, we are in a bull market everywhere. Everything is bull market, but not every crazy thing gets through. So please make sure that whenever you raise capital, you've thought it through. You also think about how much money you need for to get to the next milestone. And I think one thing I would like to add is where we sometimes see quite frustration on our end is, but we see a massive correlation between how founders and management interact with us, the quality of the materials, the way they communicate, and the performance after we invest. So we always ask ourselves, the way you behave with us, hopefully we presume you will do the same to your clients. And if you are not behaving well to us, and not about behaving, but not communicating clear or whatever, then we have a good indication, okay, if that's how you communicate to clients, it might not be the best way to do it. So I think be very open and clear to VCs. If it doesn't work, it doesn't work. It comes from two ends. It's not always the VC who says no. Sometimes the company says no. But please, when you interact, just be very open, very direct. Don't take 2 weeks to send over a financial model, because for us, it's one of the key performance indicators of post-investment performance as well. So I would say those two things that are coming to mind for myself.
That is great advice. And just in case you're wondering what was said then, to be clear, a lot of our applicants are from outside the UK. So it's your valuations, right? What you're asking for investment and performing well to your investor. So that's a really insightful. Thank you. Seb, would you mind to expand on that?
Yeah, I think the two things I'd sort of add, and they're probably quite tactical about how you pitch the business, but I think what we're looking for is an ambitious vision and a drive, and I guess a spark and a creativity in the vision, but a lot of realism and openness and a degree of trust in where you're at that journey. And so one of the things for me, it's a really big mistake, is when we're talking to a business and it turns out that numbers are very selectively presented. Things like, contracts that are not closed, that are booked as revenue, that are shown as revenue, calculations of things like acquisition costs for customers that exclude a huge amount of cost that is involved in landing a customer, or just any kind of creative manipulation of numbers, really. I think that just immediately breaches a lot of trust throughout the process. Inevitably, we kind of get there, whether that's in a first pitch, and then we start doing DD, and then we find out that sort of what you said isn't quite true. So that's kind of where I would really caution, is I think as a founder, when you're going out and you're pitching your business, I think it's right to be extremely ambitious about what you want to achieve, and to really have a lot of imagination about where that might go and how you might grow that in the product and where you want to take the business, but a lot of honesty and integrity about where the business is at today. In the end of the day, we see hundreds of businesses a year. We invest in, dozens, over the course of a fund. And so we know that the journey isn't kind of a very straightforward one. But we want to have the faith and the confidence that we can work together with you on that journey. So that would, I guess, be my biggest caution.
I'd like to ask you, John, what do you look for in a founder or a founded team? Maybe two qualities.
Yeah, I think we touched on this a little bit, and founder and founder team is maybe slightly different ones. I think it was Seb who used the word spark. I think that's a really good one. There's definitely a spark. It is an incredibly tough journey being an entrepreneur. So if I had two qualities for a founder, it would be work ethic and spark. If you can get those two together, that's a really fantastic combo. When you talk about founding teams, we then start to look about complementarity would be the word that I think is really important, making sure that each of the founders has a distinct role that they are growing into. So maybe it's one's a tech type person, one's a sales type person, and that's how they're going to grow out.
Thank you. Lucas, would you like to add to that?
Okay. Yeah, obviously you have all the more typical things like product focus and other stuff, but I think two things we always like to look at as well, which might be interesting, is the way you've used capital before. How efficient are you with using your capital? That for us is also quite important, because you have this funny reasoning in venture capital that people tend to give 20% of the shares away. And if they need 1 million, their business is worth 5 million. If they need 2 million, suddenly the business is worth 10 million. How did cost base just increase? So try to really understand what is the efficient use of capital. And what we also find very important, what we call access in your go-to-market and sales. Meaning, I give a very simple example. A 22-year-old, if he creates a financial product, it's relatively unlikely he will be very successful at the big banks from the start. It's different if people have 20 years of experience in that sector and know everyone within this sector. So what we call access in your go-to-market, we think that's quite important as well, because the product obviously is super important, but at some point execution, having access, doing the sales can really make or break a company. So we always look at that as well. Can they sell it? Do they have the access?
The exit strategy, that's good to know. Sebastian?
Yeah, I guess the only thing we'd add from our end is we like to see a sense of insurgency. And that probably fits a little bit with how we think about kind of building or capturing categories. But great founders at seed, at Series A, tend to have a really pronounced vision of why their industry is broken or why customers aren't served well or underserved. And have that as a very strong drive to go out every day and crack products, crack sales, hire people and bring them on board. And so I think that's probably one thing I'd add on our end, is we really love a healthy sense of insurgency around the industry. People are trying to change. And it's fine for that to be opinionated. It's fine for that to be a little bit off the charts. But we love to see that in founders.
Thank you. And for all those of you who are listening, as a VC ourselves, these are fantastic tips. So I hope you're making lots of notes. John, let's get to the actual crux of why we're all here. What type of returns are you looking for as a VC?
That's a really good one. Again, I think this has to be caveated with what stage you're investing at. We certainly look at different returns models for things that we're investing at A than at B. Broadly, the way we look at it is at Series A stage, you're looking at least a 5 times return in your base case modeling. And at Series B, you're looking at least a 3 times return in your base case modeling. And in reality, there needs to be the runway for it to be much greater than that. So we would say with Series A, there has to be a credible path to at least 10x. And you'd probably, to be honest, you'd probably want a plausible path to 10x with your Series B as well. And the reason, people might sit there and think, well, hang on, why do you need such a big return? That's a bit greedy, isn't it? The reality is the fail rates are high because we're backing early stage businesses, and therefore in order to get a good return for all our investors, we have to get a great return on the ones that win.
Thank you, John. Lucas?
Yeah, I mean, on our end, three things. So if we make an investment, we're aiming for a 10x as well. We need to see the path. That's one thing. On our own fund, what we target for our investors is a 3x. So there is indeed a fail rate, but we aim for a 3x. And the last thing I would like to add is, for us as a fund, when we talk to our LPs, cash on cash returns are more important than an optimized IRR. So we try to really invest for the long term and prefer to have a 10x in 10 years than a 2x in 1 year. And I know the math is not the same, but to give you an idea, we like cash on cash much more. So long term, big opportunity. That's where we'd like to be.
Okay, thank you, Sebastian.
I think all has been said really. The idea, the earlier you invest, the larger the outcome ideally needs to be. And I think Lucas makes a fair point as well. It needs to be a credible path to an exit at some point in time that will return cash. So yeah, because there is, maybe to just make a small side note on that, if you're in a bull market like you are right now, there's enough capital chasing companies to see markups between rounds and to have kind of paper returns that seem to make sense. But in the end of the day, we have a responsibility towards our investors to return their capital and more. And so we want to invest in businesses that eventually one day can be standalone businesses that go public or are a valuable asset to be acquired, et cetera, et cetera.
Okay, noted, thank you. Let's move on to demographics. Can I just ask, last year, 2 years, what do you see in terms of gender and ethnicity in terms of your investments for founders, please? John.
Yeah, good question. I think our awareness has materially changed over the last 2 years, but I don't think the spread of what we have been seeing inbound in the pipeline has particularly changed in the last 24 months in terms of ratio of female founders to male founders. Therefore, I don't think our ratio of investing has materially, I know our ratio of investing hasn't materially changed. So we're much more conscious of it. I'd say actually it's what we see within the companies that has changed a lot more. So every single one of our portfolio companies is far more active in diversity, and therefore our senior management teams are becoming more diverse and our boards are becoming more diverse. That's changing at a greater pace, in my view, than whether we back male or female founders.
Thank you. Lucas, please.
Yeah, I totally agree. I was going to say exactly the same. We see, diversity comes in many ways, and we see it mostly within the teams now. I think 5 years ago, you would have more easily seen, 3 ex-investment bankers, white male raising capital. And I think that it's, sometimes it still happens, but it's much more diverse now. Now you see people coming from all over the place. And that also, I think, is not only is the market changing a bit, but what you also see is, I think, because many companies have been successful and you see basically exited founders or exited senior management setting up new companies. And that also by definition creates more diverse set of people entering the new market, if I may call it like that. So yeah, totally agree with John.
Okay, thank you, Lucas. Sebastian, please.
I think, I guess, what I add to the point John made is that we're all trying to be significantly more conscious about it. For one, as a fund, I think we've defined our sustainable future goals, which explicitly include a lot around diversity in pipeline and talent and hiring, in how we support portfolio companies on that. That change is taking a while because I think 2 factors. One is access, and I think that's something we're all pushing on very much in trying to have more dedicated events that are, for example, female founder office hours, or in any case, kind of getting to see candidates that we normally might not get through warm referrals quite as much. But the other part is the venture ecosystem tends to be a reflection of the talent that comes up through tech companies. And unfortunately, I think it's changing year over year, but it's still a slow change in terms of people that are exiting companies or that have been early employees at companies or that have set up leadership functions at companies that then start companies themselves. And so that is still taking time, and we're seeing that improve over time, but we're not quite there yet. I think that we have a venture ecosystem and a tech ecosystem that's an accurate reflection of society at large. The bigger question, I think, is what we can do more about that. And to some degrees, that's about what we try to look for as funds. I think to other degrees, it's also a reflection of who are the investors. In the end of the day, there's kind of a tendency to invest in people, in models, in markets that you understand. And realistically, I'm quite clueless on femtech, for example, because a lot of the problems I don't personally experience. And so it's helpful to see there that a lot of funds are getting more diverse investor teams, more diverse GPs, more diverse LPs as well, so investors within the funds, because all that pushes us to see the opportunity of tech and kind of talented founders in a much broader pool than we have so far.
Okay, thank you. What I'd like to do now, guys, is to ask you to give a personal bit of advice to all those prospective founders out there and applicants for their journey. If you don't mind starting that, John.
This is a difficult one because you could give so many. I think the best bit of advice I could give would be don't buy into what I call the cult of the entrepreneur too much, or the cult of the VC entrepreneur. It's sort of become folklore that to be successful, you have to raise big round after big round after big round, and that those who have been successful, you see in the headlines, have had a linear path to success. And my experience, and I'd love to hear what Lucas and Seth thinks, is just none of that is true. I've seen some incredibly successful entrepreneurs who've never taken VC funding, who actually end up more wealthy than some of the ones you know better, if that's your golden life is all about monetary gain. Some businesses are perfectly poised for VC backing, and they should go and get them, and they should go and change the world. Some aren't. And none of even the very successful stories that I've had the pleasure to be a part of have been linear. And therefore, you need to prepare yourself for the ups and the downs of that journey.
Thank you, John. Lucas.
Yeah, I think of course, I agree with that. I think, focus on the business and on having a product that customers want, and the rest will follow from that. I think that's important. I think also something I would like to add is try and be as efficient with your time as possible. Time and capital are in shortage, and so be mindful. Try and surround yourself with good people. People who have done it before, because you will learn so much from them. I see so many people losing time, like doing 1 year market study or 1 year this, 1 year that. I stop and just start building the product and get going. It's unbelievable. I think the media does not always portray a very good image of how it really works. It's a lot tougher than people think, and B, valuation and raise is typically an output. It's not an input, and I think that's where some people really don't see that yet. I think that's what I would say. And just you have to be passionate about it, and it's going to be painful, and I'm sure at some point, if all goes well, every good business has been funded, in my view. I mean, most of them. 99%. Sometimes something can go off, COVID hits or whatever, and you're in March 2020 raising. But if your business is good and people trust you as a person and like what you're doing, it will always work out.
Thank you, Lucas. Sebastian.
So I've got sort of two that probably are also a reflection of what we experienced when building Circ. I think one is actually quite specific to fundraising. In the end of the day, when you take money from someone, you partner with them in the long run. And as time goes by and as your company becomes more mature, the human factor there is probably becomes different, and costs of capital matters a lot. But in a market like it is today, I think it's very easy as a founder to go and optimize for a vanity metric like valuation. Whereas in the end of the day, what you're trying to do is you're trying to find partners in your journey that help you de-risk what is a very risky enterprise where a lot of businesses fail. So I think my first piece of advice would be, if you do go out and raise money, be very mindful about who you want to work with for the long term, and be very mindful about what they will bring to you, whether they're angels, whether they're investors. Very early on, they should ideally feel almost like an extension of team members or people that are able to do a lot for you in very practical terms. So that'll be the first bit. I think it lines up a bit with what Lucas says as well, which is that, ultimately the goal is to build a business, not to kind of make TechCrunch headlines. The second one is very much about the teams you hire. I think there's a real skill that you see with great entrepreneurs around understanding what they and an early founding team can do, and when it's time to bring in someone else who can build out a function, who can really drive something forward. Very often people will wait until something breaks to do that. We see good people actually try to anticipate that and try to think through, the business needs to grow 3x this year, and a lot of that will involve a new channel. Let's proactively try to find someone who has the grit and the experience and the drive to go and build out that channel, rather than to try and start building that channel and having to hire someone in a hurry and waiting 3-4 months until they can join.
Okay. Thank you very much. And thank you to all of you for joining today. Invaluable advice there. Appreciate your time a lot. I will now hand back to the moderator and look forward to concluding. Thank you.
Thanks very much, Justin and John, Lucas and Seb. Some really interesting insights into VC and raising funding. Certainly been on that journey myself and thought there was some exceptional advice there that I wish someone had told me at the beginning of my journey. We're a little bit ahead of time, which is positive. We've got a few questions in the Q&A. I'm going to hand over to Chris Moore, who's going to answer those for us before we sum up the session today. Over to you.
Thanks, Amy, and also thanks to Justin and the VC panel. I thought there was some fantastic learnings and great experience stories. So that was really useful, I think, for the audience today. So in no particular order, a few of the questions that we've had. The first one was about why is the UK not promoting social networking companies? I think when it comes to promoting different types of tech companies, clearly the UK has strengths. It has strengths in a number of areas. Think of things like fintech and technology for healthcare, but also in technology for autonomous vehicles, lots and lots. So I think we do from certain kind of themes, and currently there's a lot of emphasis on technologies or clean growth. But if a company comes and we promote what it is that we do in the UK market, there's always a number of ways that we can help. Sometimes that's suggesting that through a third party, so like Rochester PR, for instance, who can certainly help with those kinds of communications, but also sometimes it's engaging with the right kinds of networks, and community would suggest that the company begins to look for the right kinds of trade shows, trade activities, organizations. And as you go more towards the creative sector, of which social networking probably falls, there are many other organizations that we might want to bring in our colleagues from the creative team. But if there are specific, more detailed questions, then feel free to get in contact with DIT after the call. Second question was about registering a business in the UK and whether you'd want to operate the business, registering a business in the UK and then operating the business on a day-to-day basis in a lower labor cost country. We see lots and lots of companies who want to do this. So for instance, there are companies that are based in markets like Ukraine or Romania or in Southeast Asia that are providing software as a service or software development services. And in that instance, that's perfectly okay for a company to do that. There is no requirement for all of the company to be in the UK. But what we do recognize is that many companies find it much easier to engage internationally with customers if they have a significant base in the UK. That could be the HQ, that could be a European headquarters, or it could just be a major part of the company. Because I think the UK is well respected internationally, and in certain kinds of sectors and certain kinds of markets, this is particularly the case. So again, that's a more detailed, specific question that we can cover off on a one-to-one basis, but generally there are no issues about doing that. And the third question was around looking at whether you should have a subsidiary or a totally independent company. Now, as I think we heard from Alex earlier, and also I think we heard from Fran, sometimes there are reasons why you might want to create a completely separate independent company in the UK. But I think a lot depends on your business strategy. So where are your customers? How are you going to engage with your customer base? Do you want to do that very separately from the parent organization? Are you, for instance, applying your technology, say data analytics or AI, to a completely different area? So perhaps looking at financial services rather than healthcare, and in which case that might prompt you to establish a completely separate company. On the other hand, sometimes it's much easier to retain that linkage back to the parent organization because you may have use cases that you want to talk about from the home market in the UK. There may be other learnings that you want to apply directly from the home market as well. So again, it does depend on the circumstances, and we can provide suggestions and guidance based on our experience with other companies. But ultimately, that is a question you might want to talk to a professional. So I'm talking to Alex, for instance, may well be very helpful to do that early in your international journey. I think, Amy, those were all the questions, unless there were others I've missed.
No, that was it. Thanks very much, Chris. And
okay.
A really nice way to sum up the session today. We're a few minutes ahead of time, but I've just the full session has been really enlightening, especially listening to the panel of founders that we've supported. And I think it just demonstrates, the ease of doing business in the UK, the vast array of support to support the tech ecosystem, and the passion that we all in DIT and our commercial partners have for technology and business, and helping people like yourselves to capitalize on those opportunities. We get up and come to work to do this every day because we actually really love it. And I know the guys on my team are really passionate about working with founders like yourself, and just to reiterate, really knowledgeable, really good awareness of the entire UK tech ecosystem and landscape. And if we don't know it, we know somebody who does, like our commercial panel, our commercial partners. Big thanks finally to the Venture Capitalist Fund panel, just some really interesting insights there. And I think sometimes it's a really difficult space to navigate, especially when you're doing it first time at seed level. Just understanding what it is you need to deliver to try and secure that funding. Thanks very much to everybody today, to Chris Moore, to our panel members, and to our commercial partners. I hope this has been an interesting and educational event for everybody involved. You'll be able to access a recording, which will be shared to you post-event. Thanks very much for coming, and have a great rest of your day.